All right, everybody, I had to stop the recording and because I didn't have my mic live, it was muted. So pretty much got to start over. So I'm restarting the whole entire video. Just that way you guys can actually listen into what I'm actually teaching. Can't believe I had the mute button on my mic talking a good couple of minutes there, but it's okay. I caught my error and now I'm actually redoing the recording. That way you guys can actually hear me this time. So for those of you that are live, apologize for that, but we're gonna go ahead and restart the video. So I restarted the record, but restarted everything, hit the record button again, and we're gonna do a top-down analysis on gold. It's gonna show you exactly what I do when I analyze my charts with regards to finding an opportunity to get into the market. We're gonna try to find an opportunity, whether one exists or not, we don't know until we analyze the chart. So let's go ahead and do that now. So again, I start at the actually weekly time frame, and I want to take a look to see what trend the market's in. So my very first question that I ask myself is the market in an uptrend or is it in a downtrend? So as you can see from from these candles here, we're actually in an uptrend. So I'm going to take my arrow and I'm going to pull it from the bottom and take it all the way to the top and try to get these wicks to hit the actual trend line. Okay, because as you can see, the market was making higher highs every step of the way. And you can pretty much test that by doing one of these numbers. You have your highs, and then you have a lower high, and a higher high, lower high, higher high, lower high. Each time the market was actually trending higher every step of the way. So that's how you know that we're in an uptrend, because this is actually bigger. This high is higher than its high. And that's how you know that you're in an uptrend. Okay. So that's your uptrend right there. Okay. Now you go down to the daily. We just make sure that everything is consistent with our weekly analysis. Now on the weekly analysis, you also got to take a look at the last candle during last week, which ended Friday. Last candle will give you some clues because you can see the candle is bullish, but at the same time there's a long wick on top of the candle, just telling me that there was a retracement that happened, a pullback that happened once it hit the high, okay, the higher high. So I'm going to place our high, which is our resistance level on top, okay, and we're going to go down to the daily. And as you can see in the daily, that wick is showing itself and showing you that it's actually a pullback, okay? Now, it formed what we call a pullback of candle here, which is a bearish engulfing candle, which is bigger than the candle before it, okay? And typically when you see a candle that is bigger than the candle before it, you can also mark it off as your supply zone. So we're going to do one of these numbers and start with the candle before it and stretch it out. This is going to be our supply zone, okay? So with our supply zone, we also got to create a demand zone, right? So we got to come down here and find an area where there's big candles, okay? Multiple candles going up, but a small little candle before that bullish engulfing candle. So we can find that right here. So we'll mark this as our demand zone. Okay, always back test that. So whenever you see multiple candles and they're huge, there's very little candle before it, you want to mark it off as your demand zone. Okay. And now we're going to go to the 4 hour and see what it looks like. Okay, so we got our supply zone. You can refine it and make it smaller. Okay. This our supply zone. Then we're going to go left and mark off our demand zone, which is right here. It's actually that doji candle right here. Okay. All right. So now that we mark off those zones, the what you're going to learn in this video is how to trade off supply and demand. Because you're going to mark off your chart with your supply zone. You're going to sell off supply. Supply is usually on the top. You're going to sell off supply if you were in a downtrend, but you're going to buy off demand since you're in an uptrend. Okay. Now, you got to be patient because you have to wait for this actual, all these candles to come back down to your demand zone in order to take a trade. So usually, since we've already created a trend line, we can anticipate it to come all the way down here and bounce off this area or bounce off the trend line. Okay. So that's what you want to look at. So you already know the direction of the market. So you can take off your trend line. Okay. And you're going to wait for the candles to come all the way down here and bounce off this area. Okay. So come back down. Not going to come in a straight line. It's going to do one of these numbers. Okay. Hit your demand zone. And what the most important candle you'll be looking for off of the demand zone will be a bearish engulfing candle. Now, if you don't know what a bearish engulfing candle, again, it's a candle that's bigger than the candle previous. Okay. And I can show you one on this chart to give you an idea what a bearish engulfing candle looks like. Okay. This is considered a bearish engulfing candle. It's bigger than the candle before it. Okay. Matter of fact, there's multiple candles here that you can identify as a bullish engulfing candle. The bullish, bullish, bullish. It's called a bullish engulfing candle is what you're looking for. So definitely look for this type of candle when the actual candle comes back down to your demand zone. And once you see that, you wait for the candle to close and place the trade in the very next candle. Okay. All right. So that's all. You're gonna go down to the 1 hour now. Now, in the 1 hour, even down to the 15-minute, we're going to look for some gaps in the market. Okay. What I mean by that is you're looking for a fair value gap, okay, which is a gap between two candles that did not meet. So let's take a look to see if we can find some gaps in this market. Okay. Now, we already know it's an uptrend. Okay. And if we look left, let's try to find some gaps. Okay. Okay, we can start all the way down here. Already got a demand zone. Okay, so we'll start with here and see if we can find any gaps. Because what the market tends to do, it needs to fill in those gaps. Okay, so let's start marking them off. Okay, so were there any gaps here that the market filled? The answer is yes. Because take a look at this. This candle and this candle, you're going to skip the middle candle, and you're going to put an actual box between those two wicks. You know, plotting out your gap. So this is, we call it a fair value gap. So this is a fair value gap. So what happened is the market went up, came back, filled the gap, bounced off the gap, and continued its journey going higher. Okay, so that gap was filled. Now let's try to find another gap. Here's another one. This candle and this candle did not meet. So we stretched this out. And once again, the market went up, came into the gap, filled it, and came out of the gap. All right, now we're looking for another gap in this area. Do we see any gaps here? Yes, we do. See this candle here and this candle here. These two wicks did not come in, did not, the length of these two wicks did not touch. So here's another gap right here, a small little gap, which the market came back and filled, as you can see. It went up, the black candle filled it, so did the white candle. Bullish engulfing candle happened, and then bounced off. It's all in an uptrend, so that's why it's important to identify what trend you're in, because you can find these gaps, right? Now, what happened over here? Let's see if we have any gaps. There's no gap. As you can see, this long wick and this wick, they actually overlap each other, so that's not considered a gap, okay? And then we had a retracement right here, okay? And it came all the way back here, down here, and touched this gap again that we created on the left side. So you can always stretch out your gaps left and right. You're not stretching all the way out to the end of the chart there. Now, I'm going to look for another gap. This is a great way to train your eye to find these gaps. Okay, here's another gap. Long wick, middle candle, bypass the middle candle, and put your box between those candles, and that is also considered a gap. Fair value gap. Okay. And what happened? The market went up, came back down, filled the gap. Okay, and then continue its journey going upward. Okay, now let's see if we can find another gap here. There's another gap right here. As you can see, between this candle and this candle, there's a gap because the wicks did not meet. And as you can see, it went up, came back, filled the gap. The market always has to fill these gaps because what happens is the market shoots up and leaves all the orders left behind, and it needs to come back down and collect these orders. Okay, so the market maker says, hey, we missed a couple of orders during the gap. These are commissionable dollars that we can earn. If we can come back and get these people back into the market, we can make a commission. Okay, that's why it needs to fill those gaps. Okay, so it came and filled the gap, gave us this huge bullish engulfing candle, and look at that, continue the journey going up. All right, now, are there any gaps over here? Between this candle and this candle, we could put another box. Let's say this is a gap. Okay, so there's 1, 2, 3 in the middle candle, and then the wicks, and you pull out your box and put your box in there, and look what happens. It goes up, comes back down, wicks into the gap, and continues journey going higher. And again, there's another bullish engulfing candle. So that's why it's important to know what this candle, the definition of this candle is. When you see this candle, you wait for it to close and place a trade right after that candle. Okay. Now, is there any gaps over here? Yes, there is. There's a gap right here. Market went up, filled the gap, and continued journey higher. All right. Now, the market came down and retraced, pushed the gap again, went up, right? But couldn't sustain itself. Why? Because there's actually an area here, which is actually a supply zone, right? You consider a supply zone, but we've already marked off a supply zone. We're not going to mark off another supply zone. Okay, so we're still journeying, going up. Again, here's a gap between these two candles, but it broke through the gap. And here's another gap area right here. Went up, came in, touched the gap right here, and bounced off. You already had a previous gap there. It came and accumulated a lot of orders in a gap zone. And we look for another gap right here between this candle and this candle. And it goes up, comes in, touches the gap, continues journey higher. Now we're going to find another gap right here. All right. And this is crucial because this gap, although it went all the way up, there's no gaps here really, right? No gaps are here really, except for one here. What did it do? It went up, came and touched the gap, and went higher, right there. All right. Now this is interesting. There's more than one gap here, so you're gonna have to put more than one gap. There's one there. There's one here, and there's one here in this area, right below this candle here. You have multiple gaps there. So what happens? The market goes up. It's coming in to fill all these gaps now, right? It bounced off the last one and went up. All right, here's another gap right here. And you just got to keep marking these gaps. You might want to use different colors, but there's a lot of gaps within this area here. And what happens? The market came down, came back to another previous area that you had marked off, right? And then that gave you a bullish engulfing candle, right? And it went back and touched that gap and continued its journey going higher. Okay, and you've already created a gap here, right? And what happens? It came back, filled into this gap again, and there's so many gaps here that you can mark off. There's one right here. And look what it did. It came back, came and touched within this gap, filled the gap, and now it's trending higher. Okay. And there's just so many gaps here that you're going to mark off. Let's get closer to where we're at. You guys get an understanding. Now we're getting close to this area here. And what we're looking for are areas here that are considered fair value gaps within this area. There's a couple of gaps here. I'm going to mark off the most important gap, which is right here. What happens? The market went up, came in, filled the gap, went back up, and came in, touched the gap again. Okay, now what the market is doing, since you already know that this is actually the supply zone, and this is actually down here is our demand zone, and it's got to fill in all these gaps. You see all these gaps that are left behind, it's coming back down to fill all these gaps. So, you can wait for the market to come down and fill all these gaps and then hit your demand zone, which we marked off, which is way down here, okay? Okay, it's way down there. So you gotta, with all these these markers here, you wanna make sure you know where your demand zone is, because that's where the market's gonna come to, okay? So if we go to the 15-minute, I pretty much erase all these gaps here. We already know it's gonna come down and fill these gaps. So I'm gonna clear everything out. Okay, and mark up the actual supply zone. And then the demand zone. Okay. So in a 15-minute, this is the area where you'd like to see that it came down and touched your demand zone, as I said, right? It came down because of your demand zone again, the candle before it, a huge big candle after that, which is your bullish engulfing candle. It went up, came back down, it's hitting your demand zone. And as you can see, it's bouncing off the demand zone, right? With a bullish engulfing candle, like I mentioned. This is the candle that you want to place close attention to, okay? Because you want to place your trade in this area, okay? So this is the area that you want to place your trade right here. Look what it's doing. It's actually coming back down, right? To touch the zone, then you look to place a buy because we're in an uptrend. Okay, hopefully that was helpful. Now this is just one demand zone. It may come back down even further because we have a lot of gaps, right? That the market needs to fill. If you look left, you'll see that there's a gap right here, right? So with that gap, which has not been filled, you can anticipate it. It may come down to this area at one point in time to fill that gap. Okay, so it may blow past this area that we created here and all the way down to fill this gap and then trend higher. All right, and remember you're looking for a bullish engulfing candle. Okay, eventually going to need to break a high, come back down and fill in another gap because there's going to be a gap between this area here. Bounce off the gap and go higher. That's what you're really looking for. Okay, you don't want it to do this, right? Because if it does this, it's going down to fill another gap. But if it does this, and it gives you a bullish engulfing candle, of course, there'll be one over here or one over here. And then you want to take your trade in this area, right? And you want the trade to go back up to the supply zone. All right, so hopefully that was helpful. Just wanted to show you guys how to find these gaps, how to chart your chart with supply and demand zones, and then look for the most important candle, your bullish engulfing candle, and place your trade right after that candle closes. And you can find this throughout the chart, even when you do your back testing, or just go back to historical data and do the same thing I just did in the video. Look for your gaps and then place your trade when it actually comes back down and bounces off the fair value gap. All right. So with that being said, session is over. So I'm going to go ahead and end the video recording, render the recording, post it up on my YouTube channel, and send it out to you guys for your review. So if you got value out of it, please give a thumbs up on the video. But that's my analysis on gold, that it's going to come back